Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by August Sharma, and this is the Currency Room. And we had quite a week, very volatile week in all the markets except for the Forex markets. Someone forgot to tell Forex there were some big moves happening. In this video, we're going to go over what happened this week, take a look at the news, then we score everything from +3 to -3, and then we take the strongest, we pair them up against the weakest, and those will be our trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We saw continued losses in the equity markets, and we saw all of the equity markets breaking through 50-day moving averages. That's our line in the sand at Maverick Trading. We say above the 50 MA, lean bullish, below, lean bearish, and we are clearly below. And we had many down days this week. They were all down days, and not just down days, but opening at the high, closing at the lows kind of days. So heavy selling, and of course, everything is going against the market. Dollar going higher, bond yields going higher, gold going higher. All of the risk-off things are happening all at once. So again, this all makes sense. Equities going down, risk-off assets going up. We saw things like the Swiss franc get a bid this week after being very weak. And of course, cryptos, we saw them continue to be weak. They are a risk-on asset. I know a lot of people that love crypto, they think it's a risk-off asset, meaning it's something that people buy when they're scared. Guess what? That is not how it works. When you take a look at the data, Bitcoin and crypto are more risk on than risk off. So absolutely hurt this week with the risk off move. Let's take a look at some of the important events that happened this week. First thing I want to point out was this really strong retail sales report out of the US. This was just a really strong report. Look at this, up 1.1%. The market didn't like this because they want the Fed to cut rates. And this number is absolutely not the kind of number that is going to give the Fed confidence to cut rates. So we saw that substantially higher retail sales, and it really started the whole week off poorly. We got CPI out of Canada, and you can see it missed. People are betting on a June rate cut in Canada from the Bank of Canada. However, we saw the Canadian dollar actually strengthen this week. So this didn't make a lot of sense. Lower than expected inflation, the CAD goes up. It might have something to do with the oil markets that we have seen are going to be affected by this increased tension in the Middle East. We got CPI out of New Zealand, came in at 0.6 as expected. Then CPI out of the UK, slightly higher than expected. Really no movement on that. And then we got an abysmal employment report out of Australia. However, remember, this came on the heels of a stellar report the month before. When you average them all out, let's call that, 55,000 jobs created over 2 months. That's actually quite solid as far as numbers go. As you can see, we got mixed things throughout the world, but the US economy still looking stronger than the market wants. Let's take a look at the numbers and let's see what happened this week. We have equities down about 3% around the world, crypto down about 3%, oil down 3%, and gold up 2%. As you can see, again, a risk-off move. This is very risk-off. Everything basically happened that the textbook said should happen this week. Let's take a look at these charts. Once we broke through this 50-day moving average, the question was it going to be one of those times where it breaks the 50, and we call it a pierce at Maverick, where it pierces the 50 and then it rebounds back very quickly. This happens periodically in uptrends where it comes down, it has a big sell-off, it pierces the 50-day moving average, people freak out, a lot of people panic and dump it, and then the buyers come in and scoop it right back up. This is absolutely not what a pierce looks like. And in fact, I want you to really focus in on these candles to just see how terrible they are. So let's start. Last week, we had a gap up and a fall. We had a small gap up this next day and a fall. We had a gap up this day and a fall. We had a gap up this day and a fall. That is really bad price action. Really bad price action to gap up and then end the day at the lows. That's telling you that there are tons and tons of sellers. At this point, there's no question that there are way more sellers than buyers. You have to take a look at this market and say any rallies are likely to be sold. Ankit, what do you think about this price action this week? And have you turned more bearish than you were before?
Absolutely. And again, if we just take a look at our trend score, I mean, we have been +2 and +3 for the longest time. And we finally had that -2 score. And again, this is where, taking away from our discretion, just looking at our system, it's clearly telling us that the market has flipped. And as a trader, these are a very crucial moment because this is where we have to shift with the markets. And I think this is where, as we broke down that 50-day moving average, we just didn't bounce. And that's just a clear signal that market wants to weaken. And again, there's a lot of stuff that really strengthened or stayed strong and is now coming down as well. So again, this is where, the markets are now going into this risk off mode where, if somebody hasn't taken profits, now they are. So that's really where we are. And I've shifted with the markets as well as we are in this -2. And as long as we stay within this trend score, here's what I want to do. Any bear rallies, I want to look at those short opportunities on that one, which is, again, the opposite of what we were doing in a bull market. Now we're looking in a bear market where we're going to look for selling those rallies. So, yeah, I have definitely shifted with this markets.
Now, we saw 3% moves across the board. When you see a 3% move in equities, you typically see 1 to 2% moves in individual currencies. Take a look at this. This was a decent week. If you take a look, this is a decent week, but this isn't a great week. We should have seen a lot more volatility in Forex, and we just didn't. The Swiss franc was the best. It caught a bid after being extremely weak. It makes sense. It's a risk-off currency. The dollar went up. It is a risk-off currency. Here's the thing that jumps out at me. The yen. The yen did not go up. The yen is considered a risk-off currency. I know right now with the Bank of Japan, it may not be considered that. The fact that the yen lost ground this week after everyone and their dog is like, when is the Bank of Japan intervention going to come? We didn't get it at all this week. So yen continues to stay weak. CAD, I cannot explain to you why CAD is up this week. Should be down. Maybe it has something to do with if the tensions in the Middle East get too much, maybe there's going to be more increased demand for Canadian oil. Maybe. But look, that's just me trying to attach some meaning, some random meaning onto it. It doesn't matter why. CAD strengthened. And you can see Aussie Kiwi did what they should do in a risk-off move. They lost ground. Coming over here to crypto, we saw crypto fall, but Litecoin has been 2 weeks in a row now said, hey, I want to actually go up. Now look, go up. I think last week it was up like 1%, this week 2%. That's hardly going up over 2 weeks in a crypto move. But that is where this relative strength is. As you can see, we have risk-off moves across the board. We have to respect that. So when we look at the market and we say, what is the market score? We're at a -2. So that shifts us from we're at a, what were we at last week, Anka? Were we at a 0 or were we at a -1?
I mean, last week, I think we were at -1, as we were just right on that 50-day moving average. So that really shifted us from 0 or -1 to now a -2. Yeah.
Okay, so last week we were tilted a little bit bearish, and it's just intensified since there. I fully expect there's going to be a bounce somewhere in the next week or two. But as Anka said, I think you want to be a seller of that bounce. Let's take a look at one of the big drivers of this market, the 10-year U.S. bond. Up to 4.6%. The market does not like that. They are taking Fed rate cuts off the table. It used to be 6, then it went to 3. Now look, the Fed always said 3 rate cuts. But for some reason, earlier in the year, the market had like 5 or 6 priced in to the futures contracts. That's come all the way down to, it's now 1.8. is what the odds are. I just saw that on CNBC this morning. So look, we're now looking at less rate cuts, which means that the bond yields are going to continue to move higher. If these move up to 5%, watch out. There's going to be a lot more pressure on equities. Bitcoin, you can see this is the crypto basket. We are holding support. We're holding support. A lot of people look at that and say, oh, that's good. That's good. We're holding support. No, this is a low base. This is what happens when it's come down. It's looking at support. It's trying to hold on, but you can see it's not. And what happens is, I always like to say, this is like a bouncy ball on a table. It's bouncing and bouncing and bouncing, but eventually the bounces get smaller and smaller before it finally plunges through. I am not bullish on cryptocurrencies at the moment. This chart is telling me the next move is likely going to be a break of this support, and then we should get some intensified selling off of cryptos. Next week, we do have a ton of data here coming out. We've got manufacturing coming out of Europe on Tuesday morning. And then Tuesday night, I actually think this is going to be a really good trade here on Australian CPI. Now, I have been watching the Aussie Kiwi trade. This is pretty much the trade I'm the most interested in. We got the Kiwi CPI this week, which was as expected. If this comes out weaker than expected, remember, the RBA, they came out and said, we are more hawkish than the market thought. So we got this big run up in Aussie, and the RBNZ said, we're going to be more dovish 6 weeks ago. So we've seen this big divergence between these two, but we heard from the RBNZ a week and a half ago, and they're now more hawkish, which has made the Kiwi strengthen. If this report comes out weaker than expected, and then we hear from the RBA that they're going to soften their stance, I think we're going to see a flip of that trade. We're definitely going to take a look at that currency cross later in this video. And then we've got Bank of Japan. All right, so we got Bank of Japan on Thursday night. We should see a lot of volatility. Here's a question. Do they announce some sort of intervention? Do they enact some sort of change? If they don't, expect to see the yen continue to weaken. If they do, I want to be a seller on yen rallies. I'm not going to be like the first one in line. Like if they come out and do something and the yen pops up 1 or 2%, I'm not going to be like right there, but I'm going to be licking my chops and waiting for that eventual fade on a yen rally. So this week we have one central bank and we've got a few economic reports, but I think that the weakness in the market is really going to overshadow and push things around from there. Let's go ahead and look at all the currencies and score them from +3 to -3 and find out where we're going to be focusing this week. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? I'll be taking a look at the cryptos. Anka will be taking you through the Forex. All right, so Bitcoin, it doesn't look terrible. As you can see here, this is a little bit better price action just looking at Bitcoin. So remember, the thing we don't like is the base patterns. If you take a look at this, this is more of a pullback. This has more of the anatomy of a pullback. Remember, when we looked at the crypto basket, it fell and then just did this. That's not what we like to see. But as you can see here, this is a little bit more of a pullback. So Bitcoin, look, it's below the 50, so I don't buy things when they're below the 50. So I'm not looking to trade this whatsoever. Looking at the cryptos, Bitcoin looks slightly better. Now, all that means, if everything looks terrible, something can look slightly better. And that's all I'm saying, is it just looks slightly better than the other things that look absolutely terrible. Speaking of terrible, Bitcoin Cash, this is bad price action. This is, it fell off the table and now we're getting lower and lower bounces. We should see a breakdown this week as far as technicals are concerned. So no buying here. Ethereum, this again is more like a low base. You can see the highs are getting lower. Likely to see some continued selling next week. And then there's Litecoin. Like I said, this is one, it did have a bounce. It's not a very great bounce. And I do expect this to roll over like all the rest. But relatively speaking, it is the best looking of the worst ones. So stacking them all up, Litecoin is the best looking worst cryptocurrency. Then Bitcoin is going to be second. And then Ethereum and Bitcoin Cash just look abysmal on their charts. So as you can see here, I am not a bull here on crypto, not interested in buying crypto whatsoever. Ankit, will you take us through Forex?
Absolutely. Let's get started on the USD. So there's not a whole lot of change in the USD. Again, we are still sitting at a +3. So going into this, again, velocity is at +1, but again, I'm still looking at more longs than I'm looking at shorts. And again, this really coincide with the US bond yields as well. I think they are really correlated right now. So we're seeing that right now, the same kind of movement. So yeah, any pullbacks on a trend score, I want to use that as a buying opportunity. I think we probably go a little consolidated a little bit, but then again, not looking for any shorts, but looking more for longs. Now, I think the big trade next week is going to be the yen, because again, look at yen ahead of this Bank of Japan meeting. It looks weak to me. So there's a lot of chatter in the last couple of weeks about this intervention. And again, if they were about to intervene, they would have done already. So we're sitting at 154.56 on the price, and right now, again, no sign of relief whatsoever. So we'll find out if the Bank of Japan has anything surprises there. But leading into it, we are not really seeing market pricing in anything. So this might be another, sell the rally sort of a price action, but we'll find out. I think this is something we will be looking at closely next week. Now, looking at the Swiss franc, and this is the one that I talked about. I really like it as a short, and it really started to rally in the shorter term. And now it really brought the trend in the velocity score to 0. So I think we're really at the point of where, okay, what's next? I still like, personally, I still like Swiss franc to the downside. For the last 2 weeks, we just had a opposite trend in velocity score, and now they're just kind of in line here. So I think at this point, if this breaks above the 50, we might just see a continuation of that rally. But look at that wick that we got. I think something I'll be looking at, but so far I'm sort of holding back on any Swiss franc crosses till I get a clarity on which way it's going to move. On the other hand, the other European currencies, like the euro, still looks better. I think if you have to compare euro against Swiss franc, I think euro still looks better. We still got a nice resistance over there that can really eventually break out of once the market really start to calm down a little bit. Velocity is holding in there as well. Remember, the longer things consolidate, the bigger the breakout is, and I think that's really where we are in some of these currencies overall. Now, the British pound surprisingly did move to the downside and the upside. This kind of reminds me a little bit of euro last week, where it did pull back, but then it just rallied for the next 3 or 4 days. So we'll find out. We suddenly went from sideways to a -2, but just realized that we need that continuity or continuation to really establish a trend. So this is, again, goes on my top of the watch list the next week, if there's any continuation to this, or it's just going to be quickly bought out. Now, the growth currency, let's take a look at the CAD. And this one, again, surprises me because everyone was going in with the CPI number this week. And when the number came out weak, it's like, oh, this should be a selling opportunity, but clearly not. And like Rob said earlier in the class, this, again, could be an oil trade, that correlation. But right now, price is the king. We have a +2 on trend score, so I'm not looking to short this. I think I'm more on the long side than the short side. That's what the charts are telling me. So that's something I'll be looking into, the possible setups ahead. And then the Aussie and the Kiwi, which again been the worst one. and they did found some support on the 50 moving average. So remember, like how we went from like +2 now to a -1. Like there has been a big shift in Aussie and Kiwi. So at this point, it could consolidate at this level. We clearly have some support there. So I would need a confirmation of that support break of the 50 moving average to really get bearish. But this one is again setting up nicely. I think is just due for some sort of bear rally or some sort of a base pattern to really short off of. And then lastly, the Kiwi. Kiwi again overall looks pretty weak to me, and we got a lot of piercing through the support and then bounce back. But again, we are still in this downward trend line here. So I still like the Kiwi more than the Aussie to the short side. Velocities again down -1. The trend score is -2. So any rallies that I see would be good shorting opportunities. So my outlook again remains the same way we are in these markets. I think we just need to be in the right place at the right time. And when things are rallying in the shorter term, just like we are seeing right now, that's again time to sort of take the profits off the table and look for the next next selling opportunity when we get it.
When we take a look at the trend scores, it's pretty clear where we want to focus this week. Dollar and CAD to the long side. And we're going to look at Kiwi, pound, and yen on the short side. Again, the yen, I want everyone to understand Thursday night, the yen is going to potentially be very volatile. I think it's a very difficult trade. I think stops are likely to be hit on both longs and shorts. I don't think you want to be in it over the Bank of Japan meeting. Beforehand, I think it's a decent looking short. So let's go ahead and look at some of those trades in these areas. Now, again, this is the trend score. This is the longer term score. So we want to know what's moving right here, right now. So if we're looking at what's moving right here, right now, the CAD is moving the most to the upside and the pound is moving the most to the downside. So let's start off looking at the pound CAD. I think that's going to be the first place I'm going to be looking at early next week. And then I'm going to be looking at Aussie Kiwi shorts later in the week. Here is the pound CAD on a daily chart. And let's just really take a step back and see where this thing has been. Ultimately, 173 has been where it's been running out of gas. And it's been finding some support down here at the 169.50 area. As you can see, it's clearly wants to make its way down there. That's going to be the next level of support. Question is there enough meat on the bone here? That's only 50 pips for me. That's just not big enough on a $1.70 trade. So for me, I'm looking for a better entry opportunity. If I can get a bounce, and we can come up to this, maybe all the way back up to this 171 area, that for me will be great. Now that's going to be a pretty good bounce, a 100 pip bounce. It may not get all the way there. So if we can get even up above this, maybe 170.60, this is going to be the range that I would really love to see this bounce into for me to take a look at a potential short on pound CAD. Now, I always love to do this, and I always love to say, if I could script out what happens next week, because that's literally what we do as traders. We take these premises, we have no idea what's going to happen. Anything can happen at any time. So what I love to do is say, okay, if this happens, then I'm going to take these actions. It's really cool to do that because then if it doesn't happen, you haven't given yourself permission to take any action because you didn't build that trade out yet. So I love to say, hey, this is, if I go to write the script for next week, this thing bounces back up above 170.60. It fails somewhere in this area here. I can take a short up here. Now I've got lots of room down to that support that we have at 169.50. That way now I've got about 150 pips, about 120, 130 pips. All of a sudden, that's enough for me to make this trade if I can get that move up here. If it doesn't happen, guess what? I don't make the trade. I simply look for something else. The other currency cross I really like is Aussie CAD. I know, Ankit, you like the Kiwi better. I actually like the Aussie better as a short. I do think it's going to find some weakness along with the Kiwi. We're right here. we found some support. We found that support here. So I want to see a bounce. I want to see a bounce, and I want to see a bounce. Let's call it up to this 88.80 area. If we can get a bounce up to that 88.80 area, I would love to be able to take a short somewhere in this area. And if we do break this support, then you can see our next support is all the way down here at 87.30. So that's going to be a nice trade. That's going to be, like 100 pips on a $88 or 88 cents currency. That's a good move. That's a good move that's worth taking the risk for. Those are my two favorite trades. Ankit, what do you want to take a look at?
Hey, Rob. Well, let's just start with the Kiwi Cat. I think technically I like this one a little better, but again, we'll find out which one wins. But again, this is again a beautiful bear rally setup that we are, closely approaching that 80, 69, 80, 70 as the level of support. If it breaks that again next week, this can easily get down towards that 80 area as a possible area of support that we were back in October, September, October last year. So that's the area that I'm looking at. This one again getting very more closer to it. But I think what's important to take a look at, Rob, is the Aussie Kiwi currency pair. And if you want to pull that up again, I think this is where I'm kind of divided between those two, because you can see where Aussie's done really well, and it's still holding on. It's still holding on to that level. So the question is really, is this a bull pullback, sort of a bull pullback setup that we want to get long off of, meaning that maybe the resumption of Aussie strength versus the Kiwi will persist. So this is something I'm really looking forward to next week as we get those inflation numbers. And if there is a divergence in the inflation numbers, then I think this could easily get above that 109.50 area, which again will make me look better on those Kiwi crosses versus the Aussie crosses. So those are the ones that I'm looking at. Outside of that, like I'm still looking at some of the Swiss franc crosses. I know it's 0 right now, but dollar Swiss franc, it still kind of stands out to me. Those levels there it's at right now. Look at that. I mean, we got a big piercing through and we're right back up there. So anything above 91.50 as a level of resistance, if it breaks above that, remember this is a nice consolidation phase here, but it does have a lot more room to recover, I think. So this is again one that goes on the list for myself. I'm gonna put a buy stop order right above it, and again, if we get a runner, I'd just rather get into something that's running. And if this runs off that resistance level, I get insistence like that to the upside. So these are the ones, Rob, that I'm looking at. And again, next week, like I said, along with these trades, the challenge will be those yen crosses. So I know everyone is taking a look at dollar yen, but remember that's a wild one, because where dollar yen is right now, from a technical standpoint, it looks like there's no stopping whatsoever. But then as you go back in time and look at the charts, I mean, we are back in the 80s level here. So we are in this uncharted territories that who knows where it's going to go, how it's going to end, but based on that chart, it's just telling you it wants to go higher. But again, at the same time, like Rob said, the yen trades are tough trades right now, because then you pile in, risk of intervention or anything out of there. So yeah, this is a tough one, but I think this will again be the volatile one next week when we get the Bank of Japan rate statement. So that'll be on the focus here.
Wrapping this up, equity markets are bearish. So gold markets are bullish, bond market yields going higher. So we should see that continue, which means, again, dollar should do well. CAD is going to be tagging along with dollar. I like CAD the best this week. And on the short side, I think the only question is, what's a better short this week? Is it Aussie or Kiwi? Look, they'll probably both go down. If the market goes down, they'll probably both go down, but one's going to go down more than the other. Which one? Who knows? If the markets go up, those are going to rally. If the market goes down, they're going to fall. So I don't think you can make, a wrong decision by going with one or the other, because like I said, if the market falls, they're likely both going to fall. If the market rallies, they're both going to go up. So it doesn't really matter. You just want to make sure you're in there when the risk off moves are happening. Everyone have a great weekend, and let's go make some pips next week. Goodbye, everybody.